Last week, we got this incredible quarter for SpartanNash. That's the food wholesaler, supplies grocers, only running nearly 200 retail stores of their own across the Midwest. When these guys reported last week, they delivered a much better than expected quarter. Stock shot up more than 11% in response. That was correct. Since then, though, it's pulled back, giving back most of the gains. I like this. Let's take a closer look with Tony Sarsam. He's the president and CEO of SpartanNash. Find out what's happening in his company and in the broader industry. Mr. Sarsam, welcome back to Mad Money.
It's great to be here, Jim. Thanks for having me.
All right, Tony, we had a bunch of tech companies today, and they're hard to understand. Here's what I think that's easy to understand. You have a 4.5% yield, which is very safe. You've inflected since you were here last. The turnaround plan is in place. Tell us what it's going to do for shareholders.
Great. I'm excited to do that. Quick backdrop, though, just a reminder what we do. We are at the delightful intersection of wholesale and retail, as you mentioned. We are a food solutions company. We have a wholesale business that provides food solutions, groceries, and consulting services to over 2,300 independent grocers, including about 200 that we run ourselves at those stores. We're also very proud to serve the U.S. military system through the commissary system, giving our men and women in uniform a taste of home wherever they might be. And so with that, we serve communities, and we serve communities in a way that speaks to those shoppers and those specific communities, and it is part of what we call our people first culture, our people first in our organization, and we think about our communities in that same way.
Now, people first at this particular juncture is about fighting inflation, and I think of the companies that I've seen, maybe you're the best fighter of inflation. Tell us how you've been keeping prices down for regular people in this country.
Yeah, it's an important task for us. So as you think about, even like the last time we talked, we were in the mid of that merchandising transformation. We talked about fighting for the absolute best prices and the best variety and from our supplier community, and looking for deals and things that speak to shoppers, the things that they want to save money on, things that excite them around the types of promotions that we can offer. So we work very hard at that. We spent a couple of years in what we call that merchandising transformation, and we fight hard to keep our costs down, which allows us to not pass on any additional inflation. So we actually passed on less inflation than our supply to us was, because we feel so strongly about that for our communities.
Now, you did say in the conference call, and I was surprised about this, having been to the supermarket a couple times in the last 5 days, inflation has largely returned to pre-pandemic conditions at around low single digits. I think a lot of people feel that's not true, right?
Yeah, well, statistically, it's true. We had about 1.9% last year, and I should remind that this is growth in costs over years. So last year was less than 2% inflation versus 2023. This year, out of the gates, about the same. It's going to be a little lower. We're forecasting to be much lower, closer to even maybe 1% than it is 2%. So food is stabilized. In terms of what people are seeking, and those are really, really important fundamentals in their life, they will see that groceries are not increasing as much anymore. Back to those kind of pre-pandemic days of what the inflation might have been.
Okay, now I do want to talk about what you're doing in private label, because your private label is the lowest cost of the low and yet high quality. Family fresh and finest brands. Where will we find these?
Well, you find them in our stores that we run ourselves in Michigan and much of the upper Midwest. Those are, for example, our Family Fairs, D&Ws, our Martin stores in Indiana, and a great many other banners. And they are also carried by all of the 2,100 other independent grocers in that same territory that we serve through our wholesale services.
Now, what kind of work have you been doing with one of the great companies that we all know, Amazon?
With Amazon. So Amazon has had a journey about trying to bring in more food into their Amazon stores, right? They have been a great partner for us. They have massaged their model a little bit, so their growth is not as strong. Actually, they've pulled back quite a bit.
And that's one of the reasons why when people look at the numbers, they may be confused. They don't see underneath what's really happening here.
Yeah, so that has been one of the sources of our overall, the overall story on our top line. But we still see them as an important partner for us. We're working with them through their piece. But if we can talk for a minute about growth broadly, ex-Amazon. So we're going to invest in growth, both organic and inorganic, and you saw both expressions of those here recently. On the inorganic side, we made some acquisitions last year. Those acquisitions that we made last year, grocery stores and some C-stores, they outperformed versus our expectations in the fourth quarter. One of the reasons why we managed to have a third consecutive record EBITDA year was the strong performance of those acquisitions late in the year. We also, I'll ask one other point that gives us a lot of confidence. The investments we made in our stores and what we are doing to actually invite shoppers into the excitement of our grocery offering paid off big time during the holidays. Both Thanksgiving and Christmas were over double-digit performance for that season, which is part of the strength we've had coming into this year. So we're investing in making sure that we have a great offering in that neighborhood store that we run. And we're doing it through what we call this customer value proposition. And the customer value proposition looks at what are the prices that make sense for our shoppers, what are the things they need to save on the most. We've been really aggressive on pricing those items. And there's another macro trend that's really important to people right now. It's all around health, and people are interpreting health largely as fresh. So really, what kind of produce, meat, deli, bakery. Those things are really important to people that are looking for that overall fresh experience, and we're going to invest in that to make sure we have a great offering there. And we can export that offering to our wholesale grocery customers as well. So we see that as a really important way for us to grow organically.
All right, now I looked at price check on, you've got a great website. You've got Family Fare. It's buy one, get 1 week, maximize your savings for some really great brands that we all know. A lot of fresh stuff, too, so it's not all just canned process. You're so off the mark to be lower than everybody else. So I think people out here have to recognize, how did it happen? Because maybe the prices we're seeing are too high at other places, given the fact that you still make pretty darn good money with the prices I'm seeing here.
Yeah, and I think it is a, this is a very competitive industry, as you know. And so we have, and I wouldn't say we have the absolute lowest in the marketplace, but we are fighting that fight, and we are trying to establish what does that neighborhood grocery store mean? There's something that's important about some of our competitors who may be very deep discounters. They offer something, and there's folks who offer a variety of different types of things and services to their shoppers. Our shopper wants the whole piece. They want to have great prices. They want to have a way. They want to be able to get the birthday cake for their kids. They want that service. They want to talk to the butcher about what's the best bratwurst we have that we're serving up that day. Those things really matter to them. So that personal touch and the service they get in the whole store with good pricing, it's a little bit of a balancing act, but that's what we're doing. That's how we're fighting for the community.
But there's some cases where you can't control the price of eggs, sir.
We cannot. Yeah, so eggs have been a little bit of a challenge the last 2 years.
But what do you do?
Well, it is a constant effort to kind of get the right pricing. So as you think about it, it's a complicated story with eggs, right? So I'll take a crack at trying to open it up a little bit. So we had 2 years in a row of avian flu, which that kind of drove the price up. Those are sort of temporary events, right? But we're in the middle of one right now, so it's tougher for customers. So we worked to make sure that we had longer-term supply agreements with a lot of the farmers, so we can actually lock in on a great price. And we are right now. We have priced it as lower than the market overall, and we're passing that all on to our customers and to our shoppers. So we think that eggs are such an important way for people to get protein and nutrients. So we want to make sure we're very, very competitive on that. And we look at prices on eggs all the time. We actually have a very competitive offering on our eggs.
Well, you sure do. You're competitive offering. Anyone can see the offerings. They're all there. I looked at all of them, and I can tell you that if you want value at a price with a dividend and growth, this quarter was the real quarter that I've been waiting for, which is why I was so happy to have you on. Tony Sarsam is the president and CEO of SpartanNash. Take a look at this. Not everything has to be semiconductors. New money's back in.
Coming up, what's the read on AI? Cramer's got a one-on-one with cloud networking giant Arista, fresh off the company's latest earnings report. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.